COSM with a massive dip after the reverse split and then a huge recovery to the upside. We're actually going to have to use some math over here to figure out what could be next. Let's go ahead and dive right in. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a COSM statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community and Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so for those of you who understand some math, this is going to be for you. And the reason why I'm making this primarily statistical is because the math played out almost exactly how we were interpreting yesterday. Okay, so First of all, I mean, the dip coming back down to our newly converted resistance into support that we were already looking for. So in this case, take a look at this. Just look at how my charts got moved because of the reverse split. So this is what we've been looking at, the head and shoulders right here, and now the price action is up there because of, the reverse split. So I actually calculated a very interesting set of numbers. So from the original low, which was located right down here on November 8th, that was a 6-cent low, so 6.75 to be very precise. And how do I know that? Well, that's the beauty of having backlogs. So my video from yesterday actually shows us that we had a low of 0.675 right over here, alongside the statistical metrics that we looked at yesterday morning. So let's go ahead and move along because this is an interesting one. So keep up, okay? All right, the sum of the original low of 6 cents, the 6.75, and the reverse split plus 2,405% is $1.69, which is now our new low. Okay, so if you want to just, okay, so the backtest consisted of volatility versus momentum. Volatility represented by this indicator BBWP. Okay, so the criteria is that I would take, please remember that my metrics are here only because everything moved up because of the reverse split. Okay, so please just listen up because this is very important. Okay, so through the metrics, I actually measured the duration of the iteration, right? And the upside thrust of the iteration, and the amount of times that volatility versus momentum profile gets the upside correctly versus incorrectly. Okay, so that gave us a set of metrics, an averaged mean for us to look at. Now, in understanding that it is a plus 2,405% from 0.675 to this bottom area, which is now $1.69. You can actually double check that by checking some of the iterations that we had. So this is going to be very fast though. So it would be from the top of this iteration, which was one of those backtest run-ups, to the high of the candle, which is implying where the duration landed. So this is the duration measurement. So you can see on my cursor on the cursor trend line here that you can actually see that it's the top of this candle, right? So let's just take a quick little measurement here from that high to that wick high over there. So you can see this is very, please know that I'm not, super exact in this. I just need to zoom in real crazy, but you can see that it's measuring about 2,400%, which is the additional 2,405% precisely from the 0.675 low, or the initial low, to now the new low. Okay, so now we take the sum of 2,405%. And we actually add that to the average upside thrust that we had, so that we can convert. This is a conversion, okay? So we need to do this because everything converted from the 1 to 25, the 125 ratio split, okay? So the sum of 2,405 and of the average upside thrust of 75.573% is 24.805%. So now the sum of 28.805 plus the average upside thrust of 75.573% gives us the mean. The mean would be an upside thrust, an averaged upside thrust of 100.378%. Okay, so in this case, now we're able to see, since the signal has actually reset. So we were talking about anytime that volatility, let me just zoom in on this a little bit. So we were talking about anytime that volatility had reached the critical volatility zone, which I consider to be at 90% or above, so within the 90 percentile. Anytime that volatility has gone up to there and started a contraction phase to the downside, alongside momentum making that upside thrust, I've taken that average into understanding. Okay, so in this case, you can actually see that we started the contraction phase, and the contraction phase actually got rejected and started a new expansion phase, thus resetting the statistical metrics. So now this is slightly off now, because now we have 30 correct iterations, of which 6 are guessed incorrectly. So that changes this to, slightly. So it'll be probably 83%. It's very close to there, or 80 or 82.95 or something like that. And the average upside thrust would actually probably end up being closer to 101%. It doesn't matter. The thing is that we have reset the conditions once again. And now you can see that the momentum oscillator is pivoted towards the upside. And we can actually see that the expansion phase is reaching critical volatility, and the point that we're going to start printing these red bars. These red bars are a one-day read, since we are in the daily chart. Okay, so in adding that 100.378% to the upside, that gives us a target of 45.69, while the momentum versus volatility is still in that signal. It's still pivoted towards the upside. We can expect actually some more upside. Now, please know that this is a daily, so there's going to be variances within. There are going to be variances within the price action. Okay, so another thing is that the daily closes in a different value than what. Okay, the daily closes at the market close value. Okay, so not at the aftermarket hours value. So the aftermarket hours value is actually 8.59. So this presents a little bit of a challenge. Okay, so if we were to imply that we are going to make 100.37% move to the upside based on the firing of the signal, which is technically, let's see, which is technically right over here, which is actually at the close of the daily candle, we can actually see a target of 45.69. But if we were to imply the 100.37% move to the upside from the after hours closure, it obviously it changes. So let's go ahead and add a 100% move to the upside. So 100% move to the upside would actually lead us right into direct confluence at 1789, where the 0.618 is located. So just under that, which would put us in the golden pocket, which is usually located between the 0.382 and the 0.618. Okay, so this is a little bit of a tricky one. I'm not gonna pretend or act like I know exactly what's going to happen, but it's interesting that the math worked out exactly the same. So implying that we were actually going to retrace back to test our initial newly converted resistance into support is enough for me. That probably made it possible for us to look at a future target. So let's just see that one more time. So let's just go into the channel real quick and pull out that iteration from what we were looking at. So let's see if I zoom in just a little bit. Okay. So in this area here. So we were talking about coming back down to test the 18-cent zone right down here at the channel. So now if we're looking at this, look it actually did meet that 18-cent zone that we were talking about. That's ridiculous. Okay, so and it made a huge move to the upside. So as long as volatility and momentum are still in this criteria, it's still in this condition, the upside thrust is still relevant. So I guess you can call this a call out, but mathematically speaking, I definitely see 45.69 coming in the next session or the following session. So now one more thing that I want to take a look at here. So if we added that 100% move to the upside from the closure of the daily candle and market close, right? It takes us to a 45.69 value, which actually is just slightly off here. So let me just go ahead and correct that to, man. Okay, we're just going to leave it there because it's close enough. So, pardon me. Okay, so it takes us to right between the two spot 72 at 42.90 and a 2 spot 618 at 48.01. Okay, so that it leaves us in that gap right there, which has confluence with the 2 spot 618, another golden mean. Okay, so in this case, it also has confluence with a tiny little gap that we have here, which is dated from April 7th, 2022, wick high and the wick low of April 6th, 2022. Okay, so it also we're facing some resistance there. Okay, now the reason why I'm bringing this up is because as you can see, we actually reclaimed after test number 4, we reclaimed the broadening descending wedge, and we actually had to come right back up to reclaim the outside, thus converting the newly converted resistance into support. And now we're coming back to test it one more time, and we're right at that right now. Okay, so this could be the confirmation or validation of the support before a continuation onto the upside. Now, per the playbook rules, please remember, per the playbook rules, okay? Playbook rules. I'm not calling this, but I'm just telling you that usually the way a broadening descending wedge is traded, the upside price objective usually lands at the genesis of the formation itself. So in this case, let me just go ahead and make a quick adjustment. We are looking at a target that is very much in confluence with the 2 spot 618 at a larger time frame, and it's at 68.27. So this is now equivalent to the $2.90 zone that we were looking at before. Okay, so now this is the new target for, per the reverse split 2,405% upside, which was on the 1-to-25 ratio. And now that upside thrust is actually, the statistical upside thrust is taking us to about 45.69, and we can now take a resistance range. Okay, so we're going to take that resistance range from 45.69 to 68.23. That right there is my, I guess you can call it my call out. This is the area where I'm looking at severe resistance. Okay, so if we are going to continue on to the upside, we would actually have to break a psychological level of let's actually see if we can see it in the daily. The daily has wow, we have an all-time high of $500. Never mind. So yeah, so I'm honestly thinking that we definitely need to break through this the resistance range that I actually just showed you guys that I drew here, and then come back and test it as a new form of support before a continuation onto the upside. I'm not sure that that's actually going to happen, though. Just know that I am looking for a potential move into this area. Statistically speaking, we are looking at well within the entry of this resistance range, just with the 100 spot 38% move to the upside. Okay, so now just to gauge some clarity here, we're going to move on to the last part of this analysis. This is the divergence chart. So divergences usually happen with the price action opposition of momentum. So in this case, we are making momentum is actually making a series of higher highs, and price action is making a series of higher lows. So in this case, we are looking at we have two drives of a primary phantom hidden bearish divergence. No, actually, those are just regular hidden bearish divergence drives. These are hidden bearish divergence, and the other method is the regular bearish divergence, where price action is making a series of higher highs and the price and momentum making higher lows. So we also have two drives of regular bearish divergence. So this is actually in play right now. Okay, and as you can see, that literally peaked right there, making the oppositions between momentum and price action. So momentum represented by RSI, relative strength index, and this confirmed the downside. So I'm not calling the downside to be permanent. the reason why I say this is for the following, okay? So let's go ahead and move along. First of all, for the new viewers and new listeners, the pink line represents a 14-day moving average, which is actually stock to any RSI setup. The purple line represents the RSI signal itself, okay? So let's move on to a few time frames so that we can see or gauge a deeper edge for the coming session. Okay, so in this case, we're going to load the 30-minute immediate short-term time frame first. And for the new viewers for the new viewers in particular, please, I want you to focus in on these 4 zones here, as they are located right over here on the RSI. They're just for you to kind of follow along in case I use some jargon that you don't really understand. Okay, so in the 30-minute immediate short-term time frame, we are well within the shallow areas of the bear weakness percentile. Usually when this happens, we tend to find a gravitational pull right back into the bull weakness percentile or the opposing zone. Okay, bi-hourly is suggesting an aggressive continuation to the downside. It is at the junction between the bear weakness and the bull weakness and the bear weakness. Okay, so in this case, we do have the moving average below us, which actually can be used as a form of support before a continuation onto the upside. It doesn't mean that it's going to touch right at it and continue. It can actually fail it and then continue, similar to iterations like, let me see, like in the resistance world, like this. So it actually comes back as resistance, follows back, it actually breaks the resistance again, and then comes back in. So inversely here. Okay, so now let's go ahead and look at the 6 hour. The 6 hour is also suggesting an aggressive downside, and it is also at the junction between the bear weakness and bull weakness percentile. So in this case, the moving average is also below us. So we can definitely use that as a form of support before continuing on to the upside. Now, the daily is where I'm telling you that I believe that the upside is not down. Okay, so the higher term time frames are actually suggesting aggressive upside, and the daily has now made a bullish cross over the moving average, so this is actually looking very good. Let's look at the buy daily. Buy daily is this is what I mean by using it as a support. So the buy daily used the moving average as a support and suggesting a continuation onto the upside. Now, if we look historically, we actually do have a prior iteration to where we can actually gauge a continuation to the upside. You can see that we've actually touched here on, let's see, November 29th, 2013 at 83%, so just 84%. We are currently sitting at we're currently sitting at 78%. So there's still massive upside wiggle room to discover. Okay, so this is why I'm saying that. We're still looking at a continuation to the upside. So there could be the potential to where the coming session on Monday, look at the 3 days, still, I mean, now well within the grips of the bull strength percentile and about to enter over bot. So there's still massive upside to go. Okay, so what this is telling me is that I'm potentially looking at a pullback on Monday, potentially recover by the end of the day on Monday or Tuesday. Okay, so I think, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. I know this video is long. Please bear with me. There's a lot of math to add to this and be as accurate as we could be, okay? So, consider clicking on the links below. Discord is there. Twitter is there. If you guys have any concerns, you can always send me an email. It's located in the About section of my ARCa profile here on YouTube. And but with that said, I wish you well. I wish you a very good night, and I will catch you at the bell on Monday. Adios.